I have a couple of questions. One is on your, again, I'm focusing on risk here. Two things. Your risk was moderate, slightly on the aggressive side, but when I look at your beta, which you showed, it was 0.5, close to that, right? So which indicates that you were actually playing conservative. And two, but at a given point, you ended up leveraging yourself a lot by going 4 times your investment, which means you're taking the ultra very aggressive stance. How do you explain this shift in your risk stance, and what's the point in doing a risk analysis at the beginning if it's not monitored through your investment process?
Yes, sir. To reply to that question, what happened with respect to that leveraging was, it wasn't intentional, sir. There was one technical glitch where we weren't able to operate the software. It was in the week number 2, just 4 weeks after the investment period has started. So we weren't able to sell off few stocks. The actual plan according to the scorecard, because the scorecard will never ask us to invest above 1,25,000. So according to the scorecard, we should have sold 2 stocks, but we weren't able to. So we contacted the broker the other day. The broker said that you can trade up to 4 times. We exceeded the investment amount of 1,25,000 by 6,000 rupees. Our portfolio investment was 1,31,000. The broker said that you can go up till 5 lakh rupees. So we just stayed with that extra 6,000 in our portfolio till I got a message saying that we have to square it off.
Did the mandate originally allow you to leverage? Because you were operating within a framework.
Yes, sir.
Did the framework or the mandate allow you to leverage? Even if the broker asks or he says that there is an option, did it allow you to leverage?
Yes, sir. On the very day that this happened, we had a presentation to our professors, the faculty panel to whom we present, and we explained this as well. There was a technical glitch because of which we weren't able to sell 2 stocks, which we should have, and this was the discussion which we had with our broker. And actually they were fine with it as well. So the moment we came to know that this is going to charge us a lot, then we squared it off, sir.
So otherwise you could have gone up to 4 lakh rupees and carried on.
No, for that we would have definitely taken approval, sir.
No, but when you say the professors were fine with it, that means they are kind of agreeable to whatever you had the discussion with the broker.
No, that was because this was a technical glitch.
That I understand it was a technical glitch.
Yes, sir. So they were thinking on the lines that if this is possible, this could be implemented as well. The investment amount could be brought down to 25,000, and then 25,000 into 5, 1,25,000 could be.
But the current it was 125. So 125 into 4. Right. So you could have gone with 4 lakh rupees. So you could have gone with a leverage of 4 times for the.
Or had there not been interest, it would have been relatively comforting, right?
Yes, sir.
Yeah. So leveraging was fine had there not been interest.
Actually.
So basically what happened was we had to buy 2 stocks and sell 2 stocks. We bought the stocks, but we were not able to sell the 2 stocks. So that's why
that we have understood.
So it was not intentional.
Let's say broker said that I'll give you money if you leverage. Let's say instead of charging, had you leveraged or not? That's the answer. Forget about he charging money. He said that I'll give you money free.
In that case, it won't be leveraging, sir. It will be the extra corpus itself. If he's going to give us money, if it doesn't have any interest, that won't be leveraging.
That's not leveraging.
The entire amount will be added to the corpus of 1,25,000. The portfolio value itself would have improved. Leveraging becomes when we take something for debt.
No. So leverage. So forget the interest component. The question is you are to operate with the money that you have. If somebody else is putting in money, is it a part of your mandate? That's the question we are asking, because this is margin trading. Margin trading is not in the realm, right? So you basically exceeding the brief, because in the market you will come across various scenarios where things will be permissible, where things will happen. But the question is, will you use them? That's the question we are trying to ask. So, if there was no interest component, but if the broker would have actually paid you some amount, would you have taken?
As per the course rules, it's not allowed. So
no, because you just said that you could have added it to the corpus.
That was from the point of view of portfolio management, sir. But under the purview of the course, we are not allowed.
So you should not be doing that, basically.
Okay, in terms of your basic philosophy of investing, predominantly it is a momentum driven strategy. Now in one of the ratios you have said that the peak ratio should be low, right? So isn't the two statements conflicting in nature?
Sir, if you can actually see the three ratios listed here, if you can actually see the monthly shoot and the weekly shoot are all direct measures of momentum of the stock, while the peak ratio is actually measuring the amount of power the stock might have to continue with the momentum. So if you can actually see the peak ratio is the measure of the current stock price with the 52-week high. So so if the peak ratio is high, if it is close to 1, it actually means that the stock is almost reaching its 52-week high. So we can make an inference that though the momentum factors are in the favor of it, then the power may be less. So we try to balance that also.
So on what basis have you made this conclusion that if the peak ratio is high, the potential of the stock
No, sir.
goes down?
We have not made that conclusion as such. It is a plain indicator of where the stock stands.
Yeah. So how have you reached the conclusion that this is an indicator? Because the premise, if you take 1 year of data for deciding the momentum, and the best of the stocks might be one who are close to their highs. And on one hand, you are saying that if it is closer to the 52-week high, then it is an indicator of lower potential going forward. This is what you have said, if I have understood it rightly. So aren't these two statements totally contradictory to each other?
Sir, the decision that we take will be on the basis of all the three ratios. So basically, even if the ratios are contradicting, we will have a weighted this thing to arrive at the stock that we select. So basically, we'll have both the looks. I mean, if the monthly shoot is high, if the monthly shoot is high and the peak ratio is high for one stock, and for one more stock, if the monthly shoot is of the same range and the peak ratio is actually low, then while we actually choose between the two stocks, we can actually look at the peak ratio and make a decision. So the ratios are calculated as in to guide us with some extra bit of objective information to make the decision. That is it.
Yeah, if I got it correctly, I think your stock portfolio had a PE of 52 or something and price by book of 13. So you were comfortable with that kind of a outrageously overvalued stocks?
Sir, one of the main reason for the PE ratio is basically the fundamental filters that we have set for ourselves. So part of it is from the college. I mean, as in we were asked to invest in certain stocks with certain fundamental characteristics. That also adds to the PE ratio basically. So because we decided to invest in stocks which are fundamentally very strong, and also we were advised to do so, we actually went ahead with the fundamental. Basically, the PE ratio is decided. I mean, more or less decided once we go through this fundamental filter itself. So that is the reason why we had to live with PE ratio of 50.
The first three filters which are indicated over there were given by the institute, sir. The BSE 500, NSE 500, 300 crore market cap, and free cash flow. Over and above that, we included ROC and sector filters. So basically, if you see why benchmarks values are less when compared to us, benchmarks universe of investment was the entire Nifty. They didn't restrict themselves to NSE 500 alone. That's the reason they were able to invest in small cap as well, whereas we weren't able to. We see that one of the possible reason why our price to book value and other ratios are higher, sir, compared to the benchmark.
Achha, once you had zeroed down to the 4 to 5 sectors that you would be investing into, did the stock selection also was cognizant of the fact of representing all the sectors, or if your stock filtering would have given you 5 stocks of the same sector, still you would have gone with it?
Actually, we wanted to have diversification, but not to the extent that we have to ensure one stock from each sector. We didn't go to that extent of diversification.
So the portfolio which came was by default in terms of the filters that
sir.
you had put.
Yes.
So it could have happened that 5 stocks would have been from the same sector as well.
In that case, we had a strategy of diversifying it, going to the next stock and choosing the next sector, sir.
Basically, if we see the strategy of our benchmark also, even they have a mathematical model, the Reliance Quant Plus Fund, and they also have said that in the website that they have a mathematical model, and on top of that, they will have, the portfolio manager will take the final decision to where to invest. So our stock selection scorecard is completely independent of the sector of the stock. But if we actually arrive at a situation where all the stocks are of the same sector, then the portfolio manager and the team will have a discussion, and we'll actually try to deviate a little bit from the scorecard also.
Okay, last question. So while setting your objective, what was the objective that you had set yourself with? To follow the quant framework in totality, or you had set a subjective overlay in the beginning?
As we say, because at the outset, we didn't design the framework completely, sir. We had an idea of making the framework itself evolve as we progressed. As we saw, we improvised the scorecard itself. So initially when framing the framework itself.
That is not how it can happen, yeah. I mean, you have to design the framework to start with.
Yes, sir.
So what was the framework that you had in mind to start with?
Sir, the framework.
Saying, with all these filters, still your portfolio need not be so much aggressive. With all those 5 filters, are you saying with these filters that is what has led to the portfolio being so aggressive? There must be some more overlay on those filters, right?
Sir, it is the stock selection basically. In the
So the filters are not, so technically it's not the filters which you started with which made your stock portfolio so aggressive.
One of the reasons. So basically our thing is that if we did not have the fundamental filters and we had just the stock selection scorecard to begin with, our fundamentals of the portfolio would have been completely different, because the whole universe of our this thing will change completely. So that is what our point is.
What was the weight of Eicher motor in your portfolio?
0.15%. We bought only one. We were able to buy only one stock of Eicher Motors, sir.